I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast, and today we are talking about down payments, all these questions that borrowers have about down payments. And you would think it's pretty simple, but boy, can it get complicated.
Yeah, down payments. It is. It's a very simple concept. I remember growing up as a kid, I used to think a down payment was basically covering the gap in between what the lender was giving me and what the home was worth. So in case I stopped paying on it, they could get whole. And I'm like, Nope, that's not what a down payment is. All it is it's a security deposit, but basically just showing that you're interested in a place. That's really all a down payment is.
Yeah.
It's just a little bit of a deposit just to show that you're serious. So
yes. So we're going to go through all these common questions, right? How much, where does it need to come from?
Right.
And all these different ways to kind of break it up. So let's talk about the common questions about down payments. And let's just start with one. Okay. So Tom, maybe you can handle this. Okay. You want me to?
Yeah, I'll go ahead and read it. Okay. Can I use money from my business account as part of my down payment? So this would only really apply to self-employed borrowers. I don't know if it applied to anyone else, how it would, but only the self-employed borrowers, because they have this not commingling of funds, but they've got, bank statement A for their business and then bank statement B for their personal. And they want to be able to borrow money from their business and move it over. And the answer is that can be a little bit tricky. The answer is yes, provided that your business does not suffer from it.
Yes. And you need it really, your CPA is likely going to be the one who needs to at least sign a letter stating that the funds you're going to use from your business account will not jeopardize your business operations.
Yeah, no. They may ask, well, what does that mean? Well, basically, I think what the CPA is going to do is they're simply going to look over the file over a long enough period of time, saying to deplete the account by X amount is not going to put you into a negative cash position enough to where the business would be affected.
Yeah.
So it sounds kind of technical, and I guess it is, but it's really not that complicated. They just want to make sure the business can survive without it.
Yeah. For example, let's say you're a business with 10 employees and you have a $80,000 in your business account. You take a $75,000, you take $75,000 out of that business account. How the heck are you going to make payroll?
Right.
These things, kind of a drastic.
Yeah. Versus you've got $200,000 in your bank account, your business bank account, and you need an additional $8,000 from your business to help supplement the down payment. $8,000, over a $200,000 balance, insignificant. Okay.
Question 2, can I use cash or a gift as a part of the down payment? Cash is a no. You cannot use cash. Get that cash in your account. Let it sit there for 2 months. Do not use cash.
You're telling me cash is not king? Cash is what? What are you talking about? You can't use cash.
Cash is not king when it comes to underwriting loans, right?
Wow.
Who the heck? Where did the cash come from? Why do you have cash?
Mm-hmm.
Did you sell furniture? Did you do a Craigslist, eBay stuff, whatever it is?
Mm-hmm.
Cash in your mattress needs to be deposited and seasoned in your accounts for 2 months.
Right. The big point there is it needs to be seasoned and also sourced. They need to know where it comes from, because not only is the down payment a kind of a source of, your level of interest in the property, remember that security or that security deposit, but it's also that it literally came from you. It cannot be a loan. You cannot, sell. Well, I guess you just take out a loan and, here's my deposit. I'm serious. No, it has to come from your own efforts, your own source. And
nowadays we don't have a lot of borrowers with cash. I mean, it was more common in the past to have a lot more cash. People's savings habits have changed. Their banking habits have changed. So we don't see as much of it, but it happens.
But you'll be surprised. I mean, we get calls from people that they follow different personalities on the radio, and they've got cash sitting under their mattress, or they're a collector and they've got all these different collectibles, or they've got a couple boats and RVs, and they sell these boats and RVs, and they've got 20,000 it can't be used
Good
unless it's
point.
seasoned.
That's a good point. That's
Okay.
right. Okay, so the second part of that question was, how about a gift? Yes, you can receive a gift. The gift has to come from a relative. All right. And gifts are allowed on down payments if you are buying a primary residence. If you're buying a second home, it's actually, you need 5% of your own down payment. The rest can be a gift.
Right.
Okay?
So,
And if you're going with an investment property purchase, there's no gifts allowed.
right. If you're a big enough player to buy an investment property, that down payment needs to come 100% from you.
Yes.
So, okay, good. Number three, do I have to put a large down payment for an investment property? The answer is yes. Typically, it's 5% down for primary, 10% down for second home, and 15% down for an investment property if it's single family. If it moves into the multifamily world, then you get into that 25% down.
A lot of people are like, wait, 15% down on an investment property? I thought it had to be 20%. I mean, because we usually say 20, because but technically, folks, there is an option to do 15% down. You pay mortgage insurance and it's pretty large. Not a lot of people do it, but yes, only 15% down.
Yep.
Okay, number 4, what is the minimum down payment for a mortgage? Are there zero down mortgage loans? There is only one zero down mortgage loan. It is a VA loan. I'm going to also say too, a USDA loan. But here, there's not many USDA loans out there because the city limits are so far. It's so hard to find a USDA loan eligible home away from the city. But a USDA and VA, okay, are the only zero down. And the minimum down for a conventional loan is 3% down. And the minimum down for FHA is 3.5%.
Now, on that 3% down, you have to qualify for the 3%. So typically, it's 5%. But as long as you qualify for that conventional product, it can be as low as 3%.
Right. There are some eligibility requirements you need to pass.
Okay. Number 5, is it better to pay PMI or try to put as much money down so that you avoid PMI? I think that is a very personal preference. My quick thought is that PMI, people overthink it.
So can I clarify maybe the question we're trying to ask here is, do I
put enough money down
to where I don't have to 20% down, or do I pay PMI?
Right. So the question is, do I put enough money down? If assuming you have it, do I put enough money down to avoid the private mortgage insurance? Or do I save that cash? Number 1, it is a personal decision. Number 2, if I had to guess, I would say that people overthink it. I personally think if you have enough money in the bank and you can afford to put 20% down and have cash in the bank for emergency fund plus, then I say put 20% down. If you barely have enough to put 20% down, I would try and stretch a little to put that 20% down so that you can avoid the PMI. But if it's too tight for you, don't overthink it. The private mortgage insurance, when you put 15% down or even 10% down, is very reasonable.
Yeah.
So,
and for people who are wondering about these PMI, if you put 10% down, 15% down, remember, it is a myth that loans with mortgage insurance have higher interest rates. It's actually the opposite. There's a slight improvement on interest rates if you have PMI. So don't be afraid of, or think that your interest rate on your loan is going to be higher. And we have a whole podcast about PMI and on that.
That's right. Okay. Yeah, that's right. Okay, good. What's next?
What is the connection between the down payment and the loan to value? Okay, so loan to value. If you say you're putting 20% down, that means you have an 80% loan to value. If you're putting 10% down for down payment, you have a 90% loan to value. Okay, it's a ratio. It's the loan divided by the value.
Right. And
for loan to value, yeah.
And the acronym LTV. The other LTV that you'll hear about in terms of loan ratios is CLTV, and that just means combined loan to value. That's a much more rare instrument, but it happens in the case of a second.
Hmm.
If you're buying a big enough home, and the mortgage lender may ask, sale TV, what is that? Or our max is 85. Those throw these terms around, but it's LTV and CLTV, and it
Yeah.
all has to do with how much money down are you putting.
So, and banks generally look at loan to values and down payments in increments of 5%. So it's usually you'll hear 95%, 90, 85, 80, 75, 60, and so on. Okay.
Mhm.
When you get below 60%, there's not much difference on anything. But basically, banks make adjustments on your pricing and everything based on credit score and the loan to value.
Okay, good. If the appraised value of a home exceeds the sales price, can the difference be applied to the down payment? I mean, great question, especially if you're buying a home from a friend and they are going to actually give the home to you, not from a friend. A friend would never do that, right? Are friends that good where they'll give you equity? No, they may buy you a beer, but they won't give you equity.
Yeah.
Family will give you equity sometimes. So if a family member gives you equity, they sell a house to you for 200, but it's worth 250. We get the common question: can I apply that extra 50,000 towards the down payment? Right, that's going to help my LTV. That it naturally makes sense that way, but the way the underwriters will look at it is that they will go to the lower of the appraised value or the sales price.
Mm-hmm.
So the down payment cannot be. We're going to talk about gift of equity. That's a little bit complicated, right?
Right. I think just for the question itself is
We're
that
gonna.
it doesn't matter what your home appraises for. Okay. If your home appraises for $1 million and someone sells it to you for 500, the bank uses the benchmark for value is the lower amount, the sales price of 500.
Mm-hmm.
So the down payment is going to be a percentage of the sales price.
Right.
Okay. So it doesn't matter
So
what it
all,
appraises for.
so all the appraisal does is just helps you sleep really good at night.
Mm-hmm.
If it comes in high.
Yes.
And then when you go to refinance, within a certain amount of months, then that's when the appraised value really helps you. So on the initial
Yeah.
transaction, doesn't help, except helps you sleep at night. When you go to refi, that's when you can take full advantage of that new value with that lower LTV that'll get you better pricing. So
Yeah, and something else that's connected with this question is sometimes people will say, well, if my home appraises for more than the sales price, can I take that cash out and do home repairs? No, right? It's and that's great that the home appraised for more, but you just can't access that cash. Again, they're taking the lower of
mm-hmm.
it's the sales price they're looking at.
That's right.
Okay.
That's right. Okay, what's next?
Can a home seller contribute to the buyer's down payment? The answer is no. The seller cannot contribute. The only person who can contribute in the form of a gift is going to be a relative. Okay.
Mm-hmm.
Those gifts that we were talking about, those can come from a relative, but the seller can contribute money to the buyer, but only towards the closing costs and the prepaid taxes, insurance, and interest on the purchase.
Which is a big deal. So again, this just kind of goes back to the whole, cash is not king when it comes to down payment. So if the underwriter doesn't let you use cash under your bed, of course he wouldn't let you use money from a seller. They're really, again, wanting that down payment to come from your own, literally sweat, your own
Yeah.
work, or have it be sourced from that family. And at one of these days, I
And
think we do
yeah.
a podcast that really kind of dives into what is a down payment, because
Yeah.
at the heart, I think it's more than what meets the eye for
Yeah.
sure.
Now there was a lot of fraud committed, about the 2009, 2008, 2007, especially when the housing was going crazy. A lot of fraud with this happening. Sellers, actually a lot of builders, a lot of these small little builders were getting all creative. Hey, you buy our house, you would buy the house for 20,000 more than the actual real value of the price.
Mm-hmm.
And the builder would basically credit you $20,000.
Oh boy,
Okay.
that seemed
And they would,
win-win, right?
and then they would get an appraiser in on this deal too. So this was a fraud issue that became real popular in the past.
Yeah. Okay. Next one. Is it wise to withdraw money from my 401k for a down payment? I love this topic, and I could talk a lot about this. the purpose of a 401k is for retirement. I say never touch your 401k except when it comes to a home. When you, and not even from an investment perspective, from a
bunch of financial advisors are like, what? Did he just
say that? I personally think from an investment perspective, it's still a very good use of that money, and yet you do get return. But if you set the investment aside, what is life about? It's about living, and it's about being safe, and it's about going home to a place that you're comfortable in, that you feel productive in. And if that helps you if your 401k helps you be comfortable, safe, productive, holy cow, ding, 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 ding.
Because really what's happening here is the 401k loan is being taken out to take care of your, really a primary, the number one, I guess, asset of your life, your home, your roof, your shelter. It isn't being taken out to speculate on stocks.
Right.
You're not buying that Porsche. You're not going out there and buying land. You're just, this is not speculation. This is the home you live in. This is the quality of life. It is the number one thing. Who cares if you have a great 401k if you don't have a home and you live, anyway, to prioritize, I think.
What? We could probably do a podcast on that. I bet you that the house gives a bigger return on investment. If someone were to start a 401k at $5,000 and never contribute ever again, and you were to purchase a house using a $5,000 down payment, what that would turn into in terms of equity after 30 years.
Yeah, it'd be a good podcast. And of course, I do think that this is to help people get moving. The first-time home buyers, get them going, because it is hard to save that money for a down payment.
Yeah.
This is a lot of people. It's a good thing to do. Take that loan, pay yourself back through the 401k loan, right? You pay yourself back, but get yourself going on home ownership. I'm not saying like every house you buy, do a 401k loan, but I do think
right. The goal is not to.
Yeah.
But if you need to, and I want to touch on something you talked about, we referenced very quickly down payment assistance. Well, we tell people nothing in life is for free, including a free down payment. So the minimum down payment, take that conventional loan or FHA loan at 3% for the conventional if you qualify, or 3.5% for the FHA. And if you break it into three parts, I say 1% from your own savings, 1% from a very loving family member, and 1% from your 401k. And some people don't even forget about, especially first-time home buyers. They go and check, I do have a 401k. It's got $8,000 in it. I didn't realize that. I thought I just had $2,000. So the 401k, not using it all for your down payment, but for a portion of it, I think it's a very useful tool.
Yes. Now, for the 10th question is, can the lender contribute to the buyer's down payment in exchange for a higher interest rate? No. The lender is very similar to the seller in the sense that they cannot contribute money towards the down payment. Now, however, we can raise the interest rate and create a credit that is applied towards closing costs and prepaid taxes and homeowners insurance and interest. Okay. So, yes, we can pay for those closing cost prepaids, but not the down payment.
Awesome.
All right.
Down payments, they seem simple, but there can be little nuances. So if you've got any questions, please feel free to reach out.
And make sure, everyone, we do this every week. So please submit questions, share this content, contact us, and, like us on Facebook, subscribe to this YouTube channel. There you go. Right.
Call, email, whatever.
That's right. We'll be here for you.
Okay.
Take care, everyone.
Thank you, folks.
Hey, guys. Thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to tom@azmortgagebrothers.com or yours truly at eddie@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.